You're tuned back into Agriculture Today, and we continue our show with K State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Guy, as we continue our conversation on the international and domestic grain market, wanting to talk with you on the international market for soybeans.
Yeah, the soybean markets, it's been hemorrhaging as bad as corn and wheat. It's been down about $1.60 over the last month. Again, looks like we see a little bit support there post WASDE as we seem to stop the bleeding, but we're still, at four-year lows on that, and it's just not a pretty situation. When it comes to soybeans, looking at the world situation, we look at China imports. For next year's new crop, we're unchanged at 109 million metric tons. Interesting, the domestic crush for China is at 103. I think what we're seeing is China is going to build some soybean inventories as at these lower price levels. Optimistic thing, when I was in China last week, we did see China come in for their first purchases of new crop soybeans on the 10th. They bought 132 million metric tons of new crop soybeans for new crop delivery, which was happy to see. Then just this morning here on Thursday on the flash sales, there was 510,000 tons, 500,000 tons of soybeans for unknown delivery. Quite frequently, those unknown categories, more than half the time, they're usually China buying. Also, to add a bit of support in there, in today's soybean sales, there was also 150,000 metric tons of meal. That's not likely to be going to China, but that did add support to the prices today. And we did change, I think, or close just slightly higher on the soybean complex. So not too many new changes on that. Again, like the oil seeds, we're going to be all eyes on China to see what's going to be happening there going forward. Just wanted to talk a bit about some notes and observations, what I saw while I was in China, courtesy of U.S. Soybean Export Council. Had the opportunity to speak at a conference in Nanjing, along with a number of growers from across the soybean belt. It was quite interesting. The biggest question I got was how covered was the U.S. domestic crusher. If we look at the soybean forward pricing structure, we're on a pretty strong inverse. As the July contract just went off the board, we're looking at August, and it's still a strong premium to September and then into November. And that's telling me that the domestic crusher here in the U.S. isn't covered. I don't think we're going to see China coming in until Brazil clears their production. They're having a near record crop again this year, and they're going to market that quite aggressively until they get that year's production cleared. That will not be in my projections according to November. So I expect China to come in into the market probably as we get to August, September, and I don't expect heavy new crop shipments till November forward on that. So we've got the forward pricing structure working against us, as well as aggressive pricing structure coming out of Brazil on that. So other interesting conversations with China. Go back to the exchange rate situation. The RMB has been devalued, making soybean prices a bit stronger in China, and they're experiencing some inflation over there. The economy in the second quarter was estimated to have grown at 4.7%. That's down slightly from the first quarter's at 5.3%. Their CPI came in at 0.2% for June. That's the consumer price index, although in China, we do call it the Chinese pork indexes. There's a very high correlation between the two there, and the price of pork is very, very key in that economy. Just on that, it's interesting. Smithfield says it plans to make they're the large meat producing company. They want to list that on the New York Stock Exchange, which should give that company a bit more transparency. It's Chinese owned. Also on the meat side, Chinese pork imports were down 20% to 1.5 million metric tons, and we're seeing a fairly strong supply of locally pork available, and domestic prices have come down a bit. So that's sort of what I saw on the ground there in China, and that'll reflect back into our markets. hard to get good information out of China on the data, but we seem to struggle to do what we can on that.
I should mention on the domestic side that the supply demand balance sheet didn't have a lot of changes, but we still we have adequate moisture in many areas of the Corn Belt, except perhaps in very western. The one state that's important that is dry, as showing a lot drier conditions is Kansas. So here we're seeing that coming into play, and the still, in fact, heightened projection of dry conditions as we head out of July into August, September. That puts really soybeans, the 52 bushel an acre in production for soybeans, a little more at risk maybe than corn right now, given where we're standing.
Yeah. Well,
So
you look at that crop condition index, it's at the highest level. It's at a historically very high level, indicating the crops are in good condition. And the states are pretty good across the board for both corn and beans. And we continue to get good showers across the whole grain belt every other day, as long as it doesn't get too windy. I don't see anything. That said, for soybeans, August is the critical month to determine yield for the soybeans.
We had wind damage and through this is where Guy and I don't always agree, and we can say so Guy, there's still a lot of risk out there, and again, even with what I drove through it, a lot of it looks really good, but a lot of it's kind of spotty. So I'm unwilling to throw in the towel and say we're going straight down into fall harvest. We still have a lot of risk to deal with, and especially for reproductive parts in August. On the supply demand balance sheet, the USDA did lower their projected price down to 11.10. So for soybeans for this marketing year, so we'll see where that goes. And of course, other crops to look at too. Probably we need to shift over to wheat. We do see that that the USDA came out in that report, and in a surprise, pretty much across the board, they raised the production number for almost all those classes, especially up in the soft red winter wheat, and hard red spring wheat area, and the balance sheet, the domestic U.S. balance sheet ended up, by the time we made these changes that we've talked about, ended up with an increase of 133 million bushels in production this year. So total supply up just about 300 million from year to year. Ending stocks up ending stocks to use from 39% in the current marketing year. That's after after some 23-24 adjustments that were actually shaved that down a little bit out of the stocks report. Now we're projected up at about 856 million bushels, 44% stocks to use. The USDA had about 2 months ago, we're at about 550 or $5 for the wheat price, jumped to $6, then brought it back down to 570, and that's really reflective of where we're at. Wheat on the Guy on the world side, they're probably, if anything was a surprise, was probably that we didn't see many changes in the Black Sea region for their production. Any thoughts on that?
Yeah, look, world production was increased 5.4 million metric tons to 796. That's up 1% from a year ago, and a new record for world wheat production. Russian production increased, what came in at 83 million metric tons, unchanged. Exports left at 48 million metric tons. That's actually down 7.5 million tons from a year ago. Looking a bit closer to home, Canada's production was up 1 million tons to 35. With exports up 500,000 tons to 25. Australia crop left unchanged at 29, with exports at 22. Argentine crop was up 500,000 tons at 18.5 due to higher acreage. Looking at China, their estimate was unchanged at 140 million metric tons, and the people I talked to when I was over there were quite happy with China's production and also their quality. So ending stocks came in at 257 million metric tons. That's up nearly 5 million metric tons from last month. That leaves world ending stocks to use ratio at 32.2 versus 31.6 last month. It just nothing real optimistic on the whole wheat situation from a price point of view.
And that's the news that's out there. We sure read of not so much the USDA reports, and again they're going to make their projections based on evidence in hand. More you do get reports, and you hope they're credible. They seem to be credible of cutbacks in those Black Sea region countries due to dry conditions. You can see it on the maps. So I guess we'll see that. It is interesting this last week for wheat that overall U.S. wheat had about 23 million bushels of shipments for the week ending July the 11th. And that, we've been kind of limping along at 10, 11, 12 at most. So that's I guess that's only 1 week. That's interesting to look at, and a little bit of an uptick in hard red winter wheat exports, stronger, 9.1, 9.2 million bushels of hard red spring. So I guess we'll see. But then again, you've got low prices and shrewd buyers in the international market see these as opportunities. Guy, any thoughts on that?
Nothing really to add on that. I might make a comment on ocean freight and the dollar. The dollar was down a bit yesterday, giving a bit of optimistic and supporting prices there, but back up today to above $104, which I think took a bit of what it gave us yesterday, took it back today. Ocean freight continues to slowly appreciate a bit, but it's been pretty steady. No news on that. Seem to see a bit more orderly and increasing volume going through the Panama Canal. Most of your dry bulk grain ships are still taking the long route around. If they do get that back to a more normal situation, I think that would help our basis values and execution to Asia particularly.
Dan, Guy, I appreciate you both taking the time to join us today and give us our grain market update.
Thank you very much, Shelby.
That was the senior economist at the IGP Institute, Guy Allen, and he was joined by K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.